Hello and welcome to this special India Today pre-budget roundtable. This is the first budget of the newly elected Modi 3.0 government, and there is pressure on Finance Minister Nirmala Sitharaman to be pro-populist, to be pro-Aam Aadmi, and yet she has the competing impulse of being pro-growth, pro-investment. There's also a coalition now in place in Delhi, where you've got the expectations of allies like the TDP and the Janata Dal United, which matter in the budget making numbers. How is that likely to impact the budget that Nirmala Sitharaman presents next week? To talk about this, I'm joined on this special broadcast. I want to welcome first Sanjeev Puri, Chairperson and Managing Director, ITC. He's also the President this year of the Confederation of Indian Industry. With us is Rajiv Memani, Chairperson and CEO of Ernst & Young in India. We have with us Chandrajit Banerjee, Director General of CII, R. Mukundan, Managing Director and CEO of Tata Chemicals, Baba Kalyani joins us, Chairperson and Managing Director, Bharat Forge, and Swati Salgaonkar, President of Salgaonkar and Brother Private Limited. So thank you very much to all our guests for joining us. I want to start this conversation by talking about the big idea. We've seen the kind of crowds that are coming for every single job that is announced. We saw it most recently at the Air India offices. We've seen it in different parts of the country. Thousands of people coming at the slightest announcement of a job. So what are the big ideas? One of the things that's been spoken of is the idea that there should be, like the PLI and ELI, an employment-linked incentive. Like you give production-linked incentives, you give incentives to companies if they create employment for Indian youth. So what are the big ideas for this budget which can spur job creation? Because that's the number one expectation citizens have from the government and from India, in that there will be new jobs to deal with the job crisis. Let me start by asking Sanjeev Puri first, his big idea on what Finance Minister Nirmala Sitharaman could and should do, which could spark a job boom or at least a flurry of new jobs being created. Mr. Puri.
Thank you, Rahul. First of all, let me say that, as we all know, the economy is on a much good trajectory. The fundamentals are strong. Besides public capex, there is private capex. Jobs are getting created. Private capex investment is much higher than what it was pre-COVID. So things are on the right track. And what we're really saying is how to create jobs at a much more accelerated pace than has been happening so far. And I think towards that, I think the answer lies first in the strategy that's been adopted in the past, investment-led growth. Because that is creating jobs, and always in the investment-led strategy, there's a lag for job creation, but we are seeing it happening. I think over a period of time, it will only pick up, and there are unfolding global opportunities also that are coming our way. That path should be continued. Now, to address this whole issue of accelerating the pace of job creation, I think it's important to provide impetus to sectors that have high labor intensity. And there are sectors like garments, there are sectors like toys, there are sectors like footwear, there are industries which are indexed to the wood-based industry, there is tourism, there is retail, amongst others, just to name a few. So these are sectors that have a lot of potential and employment intensive, and very employment intensive. I would also add food processing into it. So all these sectors are the ones where we need to provide further impetus. And when we are talking about employee-linked incentive, it is also, employment leads to some outcome measure. It is not just, employment-led. So that's one piece. The second piece on, as far as employment is concerned, I think is also to look at the quality of incomes. Because one is to create more jobs, the second is quality of incomes. So how do we improve quality of incomes, for example, in the agri sector? That's roughly little less than half of India's workforce. So what is required to address the agriculture sector is another area.
Okay, so I want to walk across to the budget dashboard that we've built to give you a sense of the situation when it comes to unemployment just at this moment, because this really, make no mistake, especially when you've got big elections in Maharashtra, Jharkhand and Haryana, this really is one of the biggest challenges before the finance minister, and it's important to focus on how she deals with it. I'll give you the annual unemployment numbers. These are from the Center of the Monitoring for Indian Economy, and give you a sense of how those are placed at this moment. So if you look at the annual average unemployment rate, it currently hovers at about 8%. These are very disputed figures because a lot of economists say that these are much lesser than the actual level of unemployment, but the CMI measures unemployment at about 8% of the total workforce. Chandrajit Banerjee, I was reading one of the articles that you'd written where you talk about employment linked incentives, ELIs, that we've got PLIs, it's time for ELIs. So explain how you think a scheme of this nature could work in the real world. How should Finance Minister Nirmala Sitharaman structure a scheme which incentivizes ELIs if there is to be one in this budget?
So in the same way, Rahul, that we have seen the PLI work. So the incremental job generation, especially from some of the sectors. Again, sectors need to be chosen well. Sectors which are labor intensive. And incremental employment generation could be incentivized as in the PLI. Now, in that, I would think that a very strong biased component would have to be also there for how when we look at sectors, there are areas where there has to be a strong participation of female labor force also, so to say. And I would think that I give that priority because those are sectors where we can see higher levels of job creations, areas like the textiles and apparels, even in the areas with some of the non-manufacturing sectors like tourism, participation of women could be very strong. So employment-linked initiatives, the ELI, looks at number one, the incremental employment that you create and give respective incentive to that particular investment. And I would think B is very importantly look at also the women participation and those sectors. And there are many such sectors that we cut across. In addition, I would say I think that there are things required. Say, for example, the grant of infrastructure sector to some of the sectors, to the hospitality sector, irrespective of geographies and population criteria. Currently, as you know, that the three-star or higher category classified hotels located outside of the cities with a population of about 1 million, that's granted infrastructure city status. So we require more of that. So that's one. But Rahul, you were showing the job data. I would just like to also take us on to one of the other results that we have seen, which is encouraging, and that's recently released in the CLEMS data of the RBI. That showed India has provisionally created substantial jobs. In fact, in the last fiscal, more than double than what it was in the previous.
Rajiv Memani, at Ernst & Young, you speak to a cross-section of India industry. What's your sense of how bullish corporates are at this moment when it comes to new job creation? Because there are multiple headwinds blowing. There's now more artificial intelligence, automation, robotics, software, which can upend a lot of traditional jobs. So that's happening in any case. And in the midst of all of this, we have a young population, lots of high expectations. We're seeing the kind of crowds that are coming for every job that's introduced. What are your ideas on what Nirmala Sitharaman should do? What's your sense of the appetite at this moment in India Inc. around new job creation?
So, Rahul, I think the overall sort of mood in India Inc. is reasonably bullish. Balance sheets of companies are very strong, macroeconomic fundamentals are very strong, there's a lot of resilience in the economy. And generally, people are very positive about India and about making investments going forward. So I don't think that's a concern at all. I would say the challenges to job creation, if I was to answer your question, because it's an issue, there's no doubt about it. There is a lot of positivity in India. The GDP growth is very strong, but given just the supply side of 15, 20 million children, young people joining, potentially joining workforce every year, I think it does create its own challenges. So I would say the most important thing is the just creating an environment of ease of doing business, whether it is in terms of fundamental issues, whether it's about labor, land, and everything else. The second, I would say, is that if we can provide, as you rightly said, CB mentioned, Sanjeev mentioned earlier also, that a greater amount of incentives for labor-intensive manufacturing, and they've listed down things. I think on electronics, we are clearly seeing the evidence of the success of PLI scheme. I think similarly, if you can do in some other industries, including tourism, I think that would probably be a great accelerator to job creation. Ease of doing business is also equally important. I think people today have the capital, everything else. I think that is very important. The fourth, I would say, is we need to find ways that we can give rise to consumption. And that consumption can happen because the consumption, capital goods the growth is really coming through capital goods. It's coming through government front-ending a lot of the capex. Now, I think you can see private sector coming along. I think that definitely, so I think if there's a way in which consumption, whether it is not through necessarily through the budget, whether it's through GST, whether it is through creating more economic space at the lower income levels in personal tax, but there has to be greater or some way of more effectively transferring income levels in rural India and lower income India, so that the demand capacity gets created.
Okay.
And Rahul, to just answer your question on AI and everything, that is particularly impacting right now the service industry and the high-end manufacturing industry. And I think that's truly a challenge in service industry. There's no doubt about that. But equally, there's an opportunity where India can be, the center of excellence to the world in trying to see how innovation in AI happens, where AI is built out at scale, and many enabling things that have to go around, in relation to technology that have to go around AI. I think there's an opportunity as well. But that is a question mark going forward.
Okay. Baba Kalyani, from the perspective of Bharat Forge, your individual sense of the appetite for job creation, your ideas for what Nirmala Sitharaman could be doing, and what you're anecdotally picking up from the other companies that you speak to?
Well, first of all, as far as we are concerned in our own business, we are seeing a very positive future ahead, growth, and we are expanding, we are creating jobs. But, that cannot be generalized for the whole manufacturing sector. The big problem in the manufacturing sector for jobs lies in the medium and small scale industry. And I think they are going through a lot of headwinds today. The headwinds are on account of their adoption to technology. Headwinds are on account of their ability to incur capital expenditures that are required to adapt to the new challenges that are there in front of the manufacturing sector, going digital, using not AI, but using even a high level of IT, bringing things like enterprise solutions in their place. This is a big problem for the MSME sector. And the MSME sector is one of the largest job creators in the manufacturing sector. And I think we need to pay a lot of attention to that. And I hope Honorable Finance Minister will look at that, because there's also been a lot of discussion around this sector in every ministry for the last couple of months.
Okay. Mr. Mukundan, very quickly from you as well, your ideas for what the Finance Minister could do to try and incentivize job creation for companies like yours.
Yeah. So, Rahul, I think firstly, I think jobs is one issue, but I think when you meet the companies, and I've been meeting companies across 10 odd cities, I've traveled extensively as part of this exercise to understand what is going on. I break it into 4 components. One is jobs, which is the outcome we want. But I think linked to that is skills. When you speak to industry, there is a skill shortage. So I think that element has to be addressed. Then Mr. Baba Kalyani already addressed the issue of MSME, because big amount of jobs in manufacturing will happen in MSME, and we can't sort of wish away that fact, and we need to focus on MSME in addition to what others have spoken in terms of, let's say, labor-intensive sectors. And thirdly, linked to this is a third element, which is our trade policy. I would link all these 3 in one straight line. And the reason I say that is, once you have skilled workforce, they will actually help the MSMEs to produce products of highest quality with all of the support which is extended to them. then Indian market need not be the only market they play into. They also play into the international market. So we need to line up this entire piece in one line. And I think many of the elements do exist today. We've started off very well on the trade policy with UAE and Australian FTA, and various other FTAs are in work. And we need to engage with that piece going forward in a way that it actually benefits MSME. Greater focus and attention on MSME in terms of their upgradation of their technology, ensuring that they get access to capital, all those elements, and also connecting them to the global supply chain. The trade policy must also enable them to get connected to the global supply chain, the big companies which can source from them. That will create a demand for jobs. And if at the right time you also have the right skilled labor force which is available, I think it will all address the issue. The government has done a great job in terms of coming out with a new policy, NCVT guidelines which have come out. The credit policy of the, let's say, skill sector has come out. Now the industry needs to step up and sort of work with the labor force to sort of upgrade the skills, make them ready for the job market, and then work with MSME to link them up to the global supply chain, and the trade policy must enable that connection. So that's the broad framework.
Swati Salgaonkar, the same question to you before I pivot to my next topic of conversation. But on jobs, your big ideas and what you think the finance minister should really be doing beyond what's being done.
So I think, I think it's very important that we really look at female participation in the workforce. So if we're looking at, GDP growth of 8%, and our current participation, depending on the reports you look at, are anywhere between 25 and 35%, we really need something like 45 to 50%. And I think, the gender budget has been great. It's almost 1% of GDP, but unfortunately, that's not enough. If we're looking at by 2030, to get this 45 to 50% participation, I think a lot more really needs to be done to move the needle, and especially looking at sectors like, areas like digital literacy amongst women, skill development, support for unpaid, care and domestic work. And I think also, as was mentioned earlier, MSMEs really are going to drive this growth. And how can we look at incentives and benefits for MSMEs in increasing female workforce participation?
Okay, let's now change our attention to the changed political reality. And Sanjeev Purin, I'll start with you. The difference between the last budget in February and this is that this is a coalition government. That was a one-party government which had allies, but they didn't really need them because they had the majority. And now we've seen Chandrababu Naidu, we've seen Nitish Kumar and the others make their own demands, which will have a ripple effect in other states as well. How do you see this changed political reality impacting the budget making process?
Yeah, as I said earlier, Rahul, that the process or the strategy that was adopted in the past has worked, and that is why India is a beacon of hope and promise in the whole world, and the whole world is under stress to grow at 8% is phenomenal. So it has really proven that the model and that strategy works. And I think that should encourage and motivate everybody to follow that path. Yes, that is not to take away from the fact that given certain contextual requirements at the moment on consumption, some kind of economic space, as Rajiv spoke about, or some kind of enhanced Manrega wages, or some kind of enhanced, PM Kisan. Some of those things certainly need to be looked at, but the broader focus on investment-led growth, creating capacity, strengthening competitiveness of the economy, and ramping up investments in social infrastructure, or maybe creating a roadmap where over a few years we can get to certain benchmark figures of investment in health, in education, and set some targets for skilling. Of course, that's also a joint responsibility. I think really what I'm saying is that the success of the past of reforms should energize and motivate everybody to go that path and rather look at what is the next step to do.
Okay, because one of the government's big concerns is around investment, around spurring India Inc. to invest, which is also the reason why corporate tax rates were brought down in the way that they are. Now the question is, has that led to the kind of investment the government would have hoped for? So I'll show you a few data sets around investments. First, we'll look at the index of industrial production, which has been which is 5.3% in FY23. Last year it was 5.9%. That's the rate at which it's changed. So this is as far as the index of industrial production is concerned. if beyond this, we look at Make in India, for example, and try and give you a sense of how much the new projects are which have been coming. So new projects shot up in value terms to 39.2 lakh crore rupees in FY23. Last year, it came down to 29.1 lakh crore rupees. So that's about 10 lakh crore rupees lesser, just bit more than FY22, but lesser than FY23. Let's now take a look at projects which have been completed. This again is in value terms. It was 6.6 lakh crore rupees in FY22, went up to 6.9 lakh crore rupees in FY23, then at 9.1 lakh crore rupees in FY24. I'll now look at stalled or dropped projects, where the value of stalled projects has actually gone up to 18.1 lakh crore rupees, after this being 15.4 lakh crore rupees in FY23. And I want to put this question to Rajiv Memani, because we've often heard Mr. Memani, the finance minister, say that India Inc. needs to do more. I have done what I could. I have given corporate tax rebates. We've got a industrial policy which is supposed to encourage investment, and the government at the highest levels has oftentimes been disappointed that India Inc. isn't stepping up to the plate enough. Do you see that change? Do you think it's changed to a great extent, some extent? What's your reading?
No, I think it's changing, and it has changed. As I mentioned earlier, Rahul, there is a lot of positivity. And if you look at the announcements, and maybe you pick up the larger groups and you look at their capex commitments for the next 2 years, 3 years, 5 years, it's quite incredible. I think it's more than what, at least the numbers are much more than anything that we have seen in the past. So I think we are on the numbers are now showing in the last 1 year, but we are on the verge today of probably one of the largest capex cycles that India has seen from a private sector standpoint. There's no doubt about it. And it has two additional layers apart from what traditional capex cycles that you saw. The one big additional layer is around energy transition. So whether you can start that from the renewable supply chain standpoint, you can look at the entire EV value chain. So everything that goes around energy transition, I think that's one massive area of growth. And the second is, the PLI schemes, especially in electronics, in newer areas of manufacturing, are really getting, and I'm seeing more and more of our clients actually backward integrating, trying to see what part of their supply chain, how can they get more and more manufacturing done, value added done in India. They're measuring that KPI, they're measuring that stat. So that has to translate into higher, and the balance sheets are pretty strong. The capital markets are very strong, so fundraising is not an issue. Global FDI interest is very high. So I strongly believe that we are at the threshold of probably one of the most significant capex cycles that we've seen.
But we've been at this threshold for a long time. In the last several months, we've heard, and Chandrajit Banerjee, when you and others like you meet top ministers, this is a pushback that CII, other industry bodies get quite strongly, that the government claims they've done what it could and India Inc. somehow holding back. And you've seen the likes of Arvind Subramaniam and the others write about aspects of fear, aspects of uncertainty around policy, about whether big corporate groups are being favored, etc., which supposedly in their view is holding back investment. What's your view on us being on the threshold of this supposedly phenomenal capex cycle, which we've been on the threshold of for apparently a long time, or do you actually see it now beginning? Mr. Banerjee.
Rahul, you've been showing a lot of good data, and I completely agree with the data that you're showing, and the sources of the data, of course, most credible. Couple of points, if you really, and I think that you talked about the threshold. I just wanted to say, I strongly believe we have crossed that threshold, and the pushback that we used to get are not the type of pushback that one sees now, because there is recognition that there is a private sector investment coming in across sectors. And if you really look at data, as I mentioned, if you look at the gross fixed capital formation, and you see signs of resurgence, strong resurgence in the private sector investment. If you look at the gross fixed capital formation, you see it's risen from 10% up to almost around 11%, marginally higher than the pre-COVID estimates now. And also the next net fixed assets of private sector companies that have gone from substantially from around 24 lakh crores to much above 25 in 25 lakh crores in FI in the H2 of the FY24. Now, having said that, if you really look at sectors across like cement or steel or many more, the construction-driven sectors have actually picked up on additional investments. In our the survey, with our companies, member companies, we see that about 80% of the sectors are above 80% of the capacity utilization. The second point is private sector savings. And if you really look at the private sector savings as per the latest data of the CSO, private sector savings have increased from 10% of the GDP to more than 11%, and that could be deployed for further investment. The third part is the capacity utilization. Again, if you see the RBI capacity utilization in manufacturing today is I mentioned about how it has gone up across the sector, and in those sectors actually we have seen fresh addition. And my last point is really on corporate profitability. And today, with the improved corporate profitability that's going forward, the net profits of private firms in Q4, which is strong, that really gives us a strong indicator of for more financial resources for greater private sector investment. So private sector investments have started, and pretty much, and I see going forward with a continued capex, and especially focused on the rural capex like irrigation, etc. We would see a greater amount of private sector participation.
Let's spend some time on exports. And I want to bring Baba Kalyani in on this, because if you look at the export numbers, there was a time when the government was really excited about export numbers. And I look at total numbers before I break it down into goods and services. So in FY23, exports stood at $776.5 billion, and that was a phenomenal achievement because it went up from a base of 676 in FY22, and before that it was about 500 in FY21. Then it kind of flatlined in FY24. It was only 778, so almost the same as FY23. And one of the big questions now is, are we doing enough, Mr. Kalyani, to spur exports? What more can be done in your view to bolster exports? A lot of effort being made in this direction, but is it yielding the right kind of results? Mr. Kalyani.
Okay, there are two issues, Rahul, here. From the data you have shown. Number one is there is a lot of uncertainty in the Western world today. I mean, look at Europe, look at the United States. There's tremendous amount of uncertainty, especially in the manufacturing sector, or sector to which we largely export to. And therefore, you're living in a VUCA type environment where you don't know what is going to happen next month or next quarter, etc. So given that, but if you look at the new sectors that India is suddenly exporting to, you look at defense, you look at the amount of increase that has taken place in defense exports in just 2 years. It is just phenomenal. From a zero base, we are at some 20,000 crores or something like that. And it's probably going to increase dramatically more. So I think there are a lot of opportunities in exports to increase exports. But I think the traditional exports, Europe is going through a fairly heavy political turmoil. You got the US, where the whole election has now changed with what happened last week or this week. So there is a lot of uncertainty out there. But I still believe that at least in the manufacturing sector, we will hold on to exports and we'll probably be able to grow exports. The biggest opportunity for us to grow exports is to bring industries that are closing down in Europe into India by creating some special incentives to create space and ease of doing business for them. I mean, you can bring virtually, I think, $1 trillion worth of manufacturing into India in the next 5 years.
Okay, I want to spend some time on infrastructure because one of the points that was made earlier was that the government should continue capital investments in infrastructure. And I want to show you railways. This is the amount of route length that's getting added, 68,000 kilometers for FY22. If I look at roads, for example, and that's the point that I want to make, this is the highways built per year in terms of kilometers. So it went up to 13,000 kilometers in FY21, came down to 10.5 thousand kilometers in FY22, and then about 10.3. So the argument, Mr. Mukundan, could be that when it comes to expecting the government to do more for roads, for example, a lot that could have been done has already been done in the past 10 years, and that there could be a limit to how many roads you can build or how much effort can be made in this direction. Because even if I look at the kilometers per day and how many are being built, these were being touted as big figures. It went up as much as 36.5 kilometers of roadway being built every day in FY21, and then came down to 28 kilometers in FY22 and stayed the same in FY23. So no matter who the minister, no matter how much effort, there could be limits, and are we reaching those limits? So A, what would you like to see the government do in terms of capital expenditure? B, are we now reaching a place where all these expenses could be plateauing? Because how much roadways can we build, for example?
Not at all, Rahul. I think this is the beginning. In my view, I think India's opportunity is huge. If you look at the global supply chain, I think we need to build the infrastructure we are building, whether it be ports, whether it be railways, whether it be airports for freight transport, not for passenger transport alone. You take freight transport alone on air freight, I think it has to grow at least 5 times the current number. Port capacity has to double. The rail capacity, freight corridors have to double. So if we have to export more, if we really have to play a competitive game in many areas, we've started to play the game in defense, in electronics, in chemicals. I think we've got to consistently ensure that the infrastructure investment stays ahead of the curve. So I'm really glad that the government has taken that initiative. In fact, we need to do more. And I think if you really look at, you have to reach even the level of 50% of where China is, we need 3 times the current capacity. So really, I think this consistent effort, which is not just a sectoral effort in terms of sectors which are going to be moving forward, be let's say the engines of India's growth, which is manufacturing, electronics, chemicals, defense, all of them need infrastructure support. So in my view, I think this focus which government has brought, and manufacturing will also get further pushed from the focus on railways. If you look at the freight movement railways, I think the capacity, once it goes up, there are lots of companies that are going to get benefit from those, the demand it's going to create. So overall, we are in a virtuous cycle. We've just got started, and the opportunity is multifold. And I think the market is there for us to take. We can't get a better environment, in my view. If you look at it, despite all the turmoil around the world, energy costs are almost flat. We will begin the cycle of interest rate reduction. It's going to start. I think we've almost peaked there. So I think we are sitting at the cusp of what Chandrajit clearly said, that private sector is ready with capital, which is now getting on the ground. I think government has created let's say the infrastructure to sort of push forward. I think we should continue this process and continue the momentum. At the same time, we need to ensure that we create those, let's say, agreements and pacts to make sure that the companies can benefit in terms of trade policy, focus on skills, focus on people capability. So it's an integrated approach, and I'm pretty sure that will be the focus of the government.
I want to spend a moment on foreign investment. I want to put this question to Swati Salgaonkar for her perspective, because if we look at, and I'll start with foreign direct investment, which went up to a high of $84.8 billion in FY22, and since then has actually come down to 71 billion in FY23, 71 billion FY24. And despite all of what is being done and said, foreign direct investment not going up in the way the government would like for it to happen. Why do you think that's the case? What can be done to address it?
So I think, there is a lot more that needs to be done in terms of, regulations. I think in terms of also our legal framework, a lot more needs to be done. People do need a line of sight on dispute resolution. So I think the enabling ecosystem does need to happen. I think also if you look at, what's going on globally, I think there is a lot of uncertainty, and that probably could have led to, some degree of hesitation in terms of FDI. But I do think, in terms of what the government is doing in terms of policy, the signaling, and also I think now having a stable government, I think we will start to see foreign direct investment returning to India.
As far as foreign direct investment is concerned, if we for a moment look at foreign portfolio investment, which is investments largely into the markets, there it's been a very up and down kind of curve. Went up to $38.7 billion in FY21, crashed during the pandemic, stayed low. After that, went up to $42.9 billion, and even now, a lot of what we're seeing in the Indian stock markets actually being thanks to domestic mutual funds, our own asset management companies, rather than money coming in from abroad. Chandrajit Banerjee, your sense for the signal the government could send to foreign direct and portfolio investors to make India a more attractive story, and would they be concerned about the compulsions of coalition politics and the impact that has on the reform agenda?
I'd like to answer it in two parts as you have put it. Number one, I think what we would expect, we know that there is a coalition government, but this is a pre-poll alliance, number one. Number two, there is also, one needs to also stay on course of the reforms that one has seen earlier. And I think that's the consistency that this budget should sort of project in terms of staying on path of reforms and staying on path of being able to commit that yes, reforms would continue the way it has been continuing. Third point I just wanted to mention here, that when we look at FDI, and it's yes, of course, that piece on ease of doing business, etc., but our trade policy and our economic policy alignment, all of that is very critical when we look at customs duty, and how you can let a particular foreign direct investment flourish in India and local chains develop over a period of time. So that calibration is very critical, and that understanding to be given to the investor, the foreign direct investment company or sector or industry, to understand that and to have that confidence is important. And my last point is on when we go to the states, because the states have a very important role to play, and the states have an important role to play in areas like land, which becomes very important. And that is something which the foreign direct investment, that they would look for. So I think very importantly to see how state policies, which look at land, labor, all of that, the power, all of those are taken forward with consistency, would be the important indicators in the policy framework of the government in this budget and beyond.
Okay, I want to spend a moment on FMCG sales, and I want to bring in Sanjeev Puri in on this, and I'll take you through the data that we have from the CMIE. This basically looks on the year-on-year change for food and agro-based product sales. In FY21, it was 8.3% was the increase, went up to 21.2% in FY22, came down to 8.3% in FY23. In fact, we had a cover recently for Business Today magazine which spoke of the consumption conundrum, the fact that a lot of FMCG companies have been saying that sales, particularly in rural areas, have not been growing rapidly, and that indicates to them, at least that's what they said in the investor and analyst calls, rural distress. And that really shows the dark underbelly of the Indian economy and the troubles that people are having in rural areas. So Sanjeev Puri, from your perch at what you do, and also from your perspective as CII president, your sense of this consumption conundrum, particularly in rural areas.
So, Rahul, it's true that, although the GDP has grown at 8%, the growth in consumption expenditure has been much lower. And this is, the primary reason for this is that costs, and when I say costs, it's at a global level, cost of everything, the table has moved up post-COVID. And in many economies, you actually find some level of greater amount of stress and shrinking. India has managed it better, and that's why we are on a growth path. Now, the question is really how should we, or what needs to be done to provide further impetus to the growth. Now, let me, some of it, we spoke about earlier when we alluded to this whole issue about livelihoods. That's one piece of it. Let me just spend a moment on rural. One of the things that's been impacting rural, besides the cost part, is also the extreme weather events. Because of extreme weather events in the past, the crops have suffered. And that impacts, in terms of farmers. And therefore, what we need to do, one of the very important things we need to do is how do we build resilience in agriculture? And along with resilience, also our experience shows will come productivity and enhanced farmer income. So that's one piece that needs to be addressed. The second piece that needs to be addressed is, that the number of people in rural who are engaged in agriculture is pretty high. So how do we find some alternate means of livelihood for them? So that's where I think it's important that the thrust of the enhanced public capex is more indexed towards rural. That would create a lot of rural jobs. And the third, I think, is also important to see how we can build the demographic, the human capital in the rural areas, because there are situations today where industry is looking for skilled manpower and there is a gap. So is it time, is it an opportunity now, given better physical and digital connectivity, to look at some kind of integrated rural development hubs where it could be on public-private partnership, private sector can also participate and create the infrastructure for training and skill building. And when I say training and skill building, we should also look at that as an opportunity to promote rural entrepreneurship. Like the PM Swanari scheme that was there for urban, it would be a good idea to bring that into rural. There are a lot of opportunity in rural itself for creating some micro enterprises and business models there.
Okay.
So it's really about creating jobs at scale. It's really about strengthening the agriculture ecosystem that will take us to a higher trajectory of consumption and therefore higher trajectory of investment, employment, and so on.
Okay, some interesting ideas there. Make no mistake, trying to bolster consumption in rural areas, whether it is through income transfers, whether it's by increasing Manrega, has to be one of the key focus areas, because that really is politically expedient and important for the economy as well. I want to spend a moment with Mr. Memani on disinvestment, because if you look at the target which was set, the achievement. So what you see in the bar is the target which was set, which was 1.2 lakh crores in FY21, out of which 27% was achieved. Then the target keeps coming down. In FY22, the target is only 78,000 crores, out of which only 17% is achieved. FY23, the target is brought down further to just 50,000 crores, out of which then they achieve 71%. In FY24, the target is slashed even further to 30,000 crore, out of which 55% is achieved. Mr. Memani, given the political situation, the reform appetite of the government, do you think strategic disinvestment is still something which is important for this Modi government? Or do you think, given that this could become a big political issue, the fact that there is pushback from the opposition, that you're doing away with reservation, that's why you're selling all these government companies to private operators, because of all of that now, we'll keep seeing these bars come down further and further, where disinvestment, becomes less significant? Or do you think because it's the new government, maybe we'll see new energy on the issue of disinvestment?
No, Rahul, my personal view is that for the amount of capital that this generates and the amount of energy that will consume in the parliament and media, my guess is that the government will not do strategic disinvestments. And apart from those, that's my view, I may be completely wrong, apart from those that are already in the pipeline. I think these numbers can easily be achieved, given where the market cap of the PSU companies are. These numbers can be easily achieved, much more than that, by just trying to use capital markets and using, selling 5 to 10% stakes in companies. I mean, if you were to use just one example, Hindustan Zinc's market cap, I don't remember the exact numbers, but it'll probably be close to 2,80,000 crores. And government's holding is more than 25, 26%. It's probably closer to 27%. It's a non-strategic asset. It is a very efficiently run business. The government can easily, take some chips off the table by selling some of that in the market and on market prices. So I just feel that and there are many companies, many assets you know as well as anyone else does, where the financial objective of disinvestment can be achieved, whether from an efficiency of asset standpoint, as I said, could be those which are absolutely non-strategic, could be some hotel assets or something which the government may, there is the IDBI Bank, which is in the pipeline. There will be a couple of other assets in the pipeline. I think that may happen. But outside of that, I honestly don't see the government getting into that this year.
Chandrajit Banerjee, do you agree with that? He's almost speaking like a coalition partner, Rajiv Emani, is saying it's too much headache, don't take the trouble. Do you think they should push ahead? Because the Prime Minister, when he came, before he became PM in 2013, when he was campaigning, he said things like the government has no business of being in business, we have to make this a small government. So therefore, that was at least the idea. Now, that idea has run into different kinds of trouble along the way. Should the government still push ahead, or do you think, as Mr. Memani says, there's too much trouble, there'll be too much pushback in Parliament, don't go that route, it's not worth the headache?
Rahul, yes, I heard what Rajiv said, but at the same time, I would really like to say that, one of the things, if we have seen the trend over the last many years, how many times have we seen disinvestment targets being met with? So I think we need to continue to have focus on disinvestment. A, it's necessary. B, we should see to have realistic targets and see how we can have an implementation map towards it. Otherwise, just by announcing it and then not keeping it in your graph clearly showed the way things have moved. There has to be strategic disinvestment. The government also would need money, and we need to make that case and really look at disengaging from wherever one can. It has to be a process. The process has to continue. The process probably needs to pick up over a period of time in a much stronger way. But yes, we should not give it up and completely look at it in a different way. And that is also going against what we discussed in the panel a little while back in terms of consistency. So I would really urge and think that we need to move ahead on that.
And that's the question. Will a government which had 303 plus seats, would it have acted differently from a government which has 240? There's a new political reality which does impact things. Otherwise, maybe if they had a big majority, you come in after that, this is the first year of the new government, would they then have wanted to do more on the question of disinvestment? It's something that will be tracked very closely. I want to spend a moment on the big picture before I wrap up. These are the GDP growth numbers from the past and the forecast. The International Monetary Fund said this week that India would grow at 7%. The forecast previously was slated at 6.4%. Last year, we grew at 8.2%. FY23 was 7%. I want to put this question to Sanjeev Puri first on the issue of the overall headline growth numbers for our country. The ADB, the Asian Development Bank, and the IMF now projecting 7%, which is more than what was originally projected in the budget. But also the issue of income inequality, that while India is growing at a fast clip, India is not growing in a wholesome fashion, that those who are at the top of the income pyramid are benefiting much more than those at the bottom, and that's something the government will have to look at very carefully before it becomes very politically explosive for them, and is already heading in that direction. So Sanjeev Puri, your sense on that?
Okay, first of all, as far as headline numbers are concerned, I think the CII believes that the potential is even better than the estimates of 7%. We say about 8% is possible. And the reason we say it is because last year, the global trade was a negative territory. This coming year, it's expected to be in a positive trajectory, and there is a significant delta there. Two, the monsoons are expected to be better, and that should improve farm incomes. That should lead to a lower food inflation, which is a sticky part of inflation, which should in turn impact consumption. And because of that, we also believe that in the later part of the year, we could see some easing of interest rates. So some more positives building on the momentum that's there. So we see there is potential to be better. Yes, the risks of weather events, the risks of the external factors remain because these are clearly monitored. As far as the other issue is concerned, I think really it's about how do you expand the pot? How do you kind of create more quality jobs? The issue that we started this whole debate about. I think therein lies the answer. And clearly investing for the future, building capacities for the future, private investment, human capital development, public capex. I think that providing impetus to labor-intensive industries, impetus to or solving the reform agenda as far as agriculture and other areas are concerned. I think these are some big ticket areas that will also provide further acceleration to investments, to FDI, and that's going to create jobs. And that's really the only way that we can solve this whole puzzle. There is no other way to my mind.
Mr. Kalyani, final words, your sense of this whole debate around income inequality, that the growth has been uneven, it's benefiting those at the top of the income pyramid much more than those at the bottom, and is creating restlessness at the bottom of that K-shaped recovery.
Well, I'm not an economist, so I would not be able to answer this from an economist point of view. But, clearly when a country is growing from wherever it is to where it aspires to grow, you're bound to see this kind of shifts. I mean, we are trying to go from a 3.2 trillion, 3.5 trillion economy to a 2047, let's say 25 or 30 trillion dollar economy. You're bound to see this kind of disparities coming in. I think over a period of time, this will get leveled out because there is a natural process as the economy grows for things to get leveled out. And we just have to wait and see, and everybody has to do their bit to make things happen.
Okay, we've had a fascinating discussion and the charts that the Budget Intelligence Dashboard put out really gave some shape and context and gave you a very real sense of where things stand at the moment, because ultimately that's what the budget making exercise is about, understanding where the money is being spent, questioning why, and looking at whether we are getting adequate bang for the buck. For the time being, Mr. Sanjeev Puri, Rajiv Memani, R. Mukundan, Chandrajit Banerjee, Baba Kalyani and Swati Salgaonkar for joining us on this India Today pre-budget roundtable. Thank you very much. Don't think we could have got a bigger, better panel of experts across different industries to try and understand the thinking at this moment in India Inc. Slipping into a break, we'll have more for you when we come back on the other side. Stay with us.